Have you ever looked at the market and felt like it was just fighting with itself? Well, today we're digging into a day just like that on Wall Street. A day where different parts of the market were telling completely different stories. So let's get right into it. On Friday, November 14th, you had investors just scratching their heads. The Dow, full of those big industrial companies, it dropped about 0.7%. But at the exact same time, the tech-heavy Nasdaq actually finished up. Just a little, but still in the green. A total split decision to end what was a really choppy week. So what gives? How does that even happen? In this explainer, we're going to tear it all down. We'll look at the numbers, we'll expose the forces that were battling it out, and we'll figure out what was really going on behind the scenes. Okay, first up, let's just look at the hard evidence from the stock market itself. The closing bell told a story of a market with a serious split personality. I mean, look at this. The S&P 500, the big broad market index, barely budged. It was almost perfectly flat. But that flat number is hiding the real drama. The Dow's dive was completely at odds with the Nasdaq's little climb. It was a market that just could not make up its mind. And here's the thing. This wasn't just some random one-day fluke. It actually fits perfectly into the bigger story of this year. Tech has been the undisputed champion. Just look at how much the Nasdaq has crushed the other indexes. This trend has been going on for a while. And you could see this exact same split personality right down at the company level. You had the darlings of the AI world, like Nvidia and Micron. They rallied and helped pull the Nasdaq up. But then you had other big names, StubHub, Bristol-Myers, even Netflix. They all got hit pretty hard, and that's what was weighing everything else down. Okay, so the stock market was a house divided. But believe it or not, the plot actually thickens when we step outside of stocks and take a look at the world of commodities. And whoa, look at this. Another total contradiction. Crude oil prices jumped over 2%. That usually signals worry about supply or maybe a bet on a stronger economy. At the very same time, gold, the classic safe place to hide your money, it fell by almost the exact same amount. These two just don't normally move so dramatically in opposite directions. So what's with the big jump in oil prices? Well, it all boils down to geopolitical jitters. There were reports of drone activities swirling around Russian oil facilities, and that's all it takes to get traders worried about supply disruptions. And when that happens, prices almost always go up. But on the flip side, gold totally lost its shine. And why's that? Well, it's because of signals from the Federal Reserve, we're going to get to them in a sec, that made the good old US dollar look like a better safe haven bet. And when the dollar gets stronger, gold, which is priced in dollars, almost always takes a hit. Okay, let's take a breath here. We've got stocks going in totally different directions. We have oil up and gold down. It's kind of messy, right? So let's start connecting the dots and identify the main culprits behind this big tug of war. It really seems to boil down to three big things, all pulling and pushing on the market at the same time. You've got the long shadow of the Federal Reserve, the weird after effects of the government shutdown, and just some general jitters from around the globe. The biggest influence by a long shot was the Fed getting what they call hawkish. Now, all that means is that the central bank is way more worried about fighting inflation than it is about boosting the economy. And for investors, that translates to one simple thing. Forget about those interest rate cuts you were hoping for. They're probably not coming anytime soon. And if you want proof of that, just look at this number. This tells the whole story. The market's odds of a Fed rate cut happening in December, they've absolutely cratered. The probability is now sitting at just around 46%. That is a massive shift in thinking. All right, culprit number 2, the government shutdown. Now, you'd think the end of that 43-day shutdown would be fantastic news, right? And for the most part, it is. But there's a catch. Now, we're kind of flying blind because all the important economic data, like the October jobs report, is delayed. That creates a fog of uncertainty. And investors hate uncertainty. And then finally, on top of all of that, you've just got this constant background noise, the ongoing trade adjustments between the US and China, those energy risks over in Europe that we talked about. It all just adds another layer of caution that keeps everyone on edge. So when you throw all of those pieces into the pot, what's the final verdict on the week? And maybe more importantly, what is everybody watching for now? Despite all the crazy swings, the mood on Wall Street isn't really one of panic. A lot of analysts are saying this is just a healthy pullback. The market's had a really strong run this year, so this is just like it's taking a quick breather to catch its breath before the next leg up. So the big question is, where do we go from here?
Well, the next major move is probably going to be triggered by one of a few key things. All eyes are on Nvidia's earnings to see if the AI boom is still booming. Everyone's waiting for that delayed jobs and inflation data to finally come out, and, of course, any new twists in the global trade story.
And that leaves us with the million-dollar question as we wrap this up. Was this bizarre day of division, this tug of war between tech and everyone else, was it just a healthy pause in a bull market, or is it maybe a little warning sign of some deeper cracks starting to form just beneath the surface? Right now, the market's jury is still out.